to do it, we need to make sure that we understand the base of the chart patterns so that we know how we can take advantage of it, how we can in the live markets actually capture the right move by using the chart pattern. Let me see how many people are still here. Well, we don't want to lose a lot of our time, so without any wastage, let's start. How to spot high probability chart pattern. Trade smart using simple chart setup. So this is what pretty much we will be talking about today, and let's start. So I'll change the slide. So once again, the first thing comes up about the 9x market. What 9x market does, basically you all know now that we are a brokerage where we help and focus on education. Education is the main thing we are focusing, so that our clients, the traders who are using the 9x market, feel confident enough that every time they're looking to enter in a trade, they have that confidence, they have that boost, that they feel like, yeah, I know, I'm pretty sure, I'm confident about the setup, the strategy I'm working on is something I know that this will definitely take me to the right direction. Of course, in the market there is some called risk and loss, which nobody likes to hear, but this is the part of the plan. It happens because of the volatility in the market, and sometimes there are news and so many other factors. So this is where 9x market provides you the correct tools, and if you have the tools, make sure with the tools you will always go in the right direction. And now very nice and friendly introduction about myself. As you guys know me now on, my name is Sahel, doing the webinar series for almost 6 months now, and with an experience of 8 years in the online investment, online trading, helped a lot of traders becoming profitable. Some of them were struggling, they were hitting their stop losses, so worked extremely hard with all of them for their risk management. So of course my aim is here to try my best to give you the right tool, the right support, so that you go in the right direction, and at the end of the day you see yourself a profitable trader. Right, so now this is something what we need to focus on, which what are chart patterns. Now all eyes are on the slide instead of me. So what are chart pattern? Shapes created by price movements on charts help predict where price might go. So chart pattern in a very simple language, they are basically some form which you will see on the chart, where there is a M pattern or a W pattern or a head and shoulder. There are different kind of designs. Let's say I'll talk in a very slang language, some kind of designs or logos where people try to predict which way the market is going. But why are these patterns are really important? Because they are guiding you, they are taking you somewhere, they are giving you the indication that what is about to happen in the market. And the two main types are continuation, which is trend continuous, and the reversal, which is trend changes direction. So there's always two type of chart pattern. One will show you the continuity, that the market is keep on going in the right direction, and the reversal one talks about a decline, meaning the price is going like this and suddenly there's a U-turn coming up like this. So there's a reversal in the price, and the price action showing you that the market has changed its side and it's going from a buying momentum to a selling momentum, or vice versa. Chart patterns are like a map. I think this is the perfect way to explain it. It's like a map. Somehow some show the price will likely continue, whereas others show it may reverse. So of course the map guides you where you need to head. Same way the chart patterns are guiding you where you see the continuation or where you seeing a reverse. All clear? Heads up, just give me a thumbs up if you understand the concept. So I know, fantastic. I can still see some people are joining, just making sure. Okay, fantastic. Let's move on to the next slide. So in the next one, the main thing is why high probability patterns matters the most. Now this is a very important question. This is a very important topic as well. Why? Because it reduces your guesswork, improves your risk reward, work in all markets. You can take stocks, crypto, forex, commodities, anything, and help you stay disciplined. That's the main thing, that you are disciplined in the market. But why? The question remains still same, that why high probability patterns matter the most? Because they increase your accuracy, and when your accuracy is quite higher, you will see that the strategies you're working on, the price action you are following, it takes you or it guides you in the right direction. So the high setup, the high probability patterns are always focused on a higher accuracy. And as we just discussed, these are some key points which, if you guys are making the note, go ahead and do that. Not every pattern works. High probability patterns happen more often and give you a better chance of success. So this is where, once again, as I was explaining you guys, that the chances of every pattern to go in the right direction is not gonna happen, because it's impossible to predict the next move of the market. But what we do is we take the help of these chart patterns, takes us to the right side, which helps us to stay disciplined and which helps us to reduce the guesswork. We are not guessing here. We are not at all guessing here. We are just making sure that we are following to the high probability chart patterns. All good. So first we will talk about the key continuation patterns, okay? And the number one, if you pay attention once again on the screen, is flag. Sharp price move, small rectangle or channel forms. By the way, you can look over here. This is a bull flag, this is a bear flag, okay? This is how the prices keep going up and suddenly there's a range or consolidation. People call it differently, it's both same. Suddenly you see there's a range bound happening here and suddenly price bounce back and breaks the resistance area and flies up. So what is this? This looks like a flag, but the main thing is this is a continuation pattern. That means if I'm seeing a flag, is this a sign of a continuation pattern? Yes, no, maybe. We will find out. Vice versa with the bear flag. Okay. So flags are like pauses in a strong trend. Price moves up or down quickly, then consolidates. Now think about this. If you imagine yourself, you are running in a race. 5 minutes of non-stop running, you will feel like you are tired. You cannot run anymore. You need to give yourself a couple of minutes break or 30 seconds break so that you recharge, you get your breath back, and then you are pumped up again to run. Same way the market behaves here as well. You see the market is running non-stop and then suddenly market needs a break where it's consolidating, where if I say it in a simple language, the market is breathing. The market is taking some breath before it's ready again to run forward. I hope you understand the point. So this is how you will always understand if you are looking for a high probability setup. Continuation pattern, basically if you are looking only for buy entry and a bull flag appear, it's a very good sign. Yeah, that maybe whatever pattern you are using, suddenly you found a bull flag, that means you are going in the right direction. There's a high probability that the price will go up. Same thing with the bearish flag as well. If you find a bearish flag, that means the price most likely to go down. Okay. Has everyone understood this point? Just give me a thumbs up once again so I know I don't have to repeat myself. Fantastic. And believe me guys, the flag pattern is one of the best patterns, yeah, especially if you are not looking for anything kind of a reversal. If you are only looking for buy entries and suddenly you found this, that means the accuracy is a bit higher now and you probably found a very reliable chart pattern. Moving on, let's move to the next one. Another continuation one is pennant. Once again, all eyes are on the screen. This is what pennant looks like. Now a lot of you must be thinking that this is kind of a bull flag or bear flag. What's the big difference? But if you look at it like this, a bull flag was, you know, there was like same kind of lines over here, the support and resistance, but this one is in a kind of a pennant shape. So if we go with the key point, small symmetrical triangles after a strong move, this is what we calling a strong move, and then some kind of a consolidation. Breakout usually in the direction of the previous trend. So the breakout is happening in the direction of previous trend. And what is the previous trend? It's in a sell side. So of course the breakout we will see is also on the sell side. In bullish market, it will be often seen after sharp price spike. So you see how sharply the price dropped down, or in this case gone up, and suddenly there's a consolidation phase came up where the pattern just formed itself, and suddenly you see a spike where market is continuing the trend direction. Pennants are mini triangles after a big move. So big move we are calling this, and these are the triangles. They show a short pause, and when price breaks out, it usually keeps moving in the same direction. Do you understand the concept? How easy to find it on the chart? But now I'm sure you must be thinking it's very easy to say on the slide, but when it comes up on the live chart, it's next to impossible sometimes to find patterns like that. Don't worry, we will do that as well. Right, and now we comes up to the reversal. So far I've given you two continuation patterns where if you're looking to continue, go with the trend, follow the trend, go in the right direction, you can use them and maximize your result. Now it comes to the reversal one, where you see a market is going like this and suddenly a reverse comes up and the price action shows that the market is going down, or vice versa in a bullish market. So shoulders, shoulder, head, another the shoulder. Same thing you're looking on your screen. This is your left shoulder, then a head, right shoulder. Very easy to spot. Of course on the price action it's difficult on the live chart, but I will show you with few examples. But what it does, that's the main question. So shape, left shoulder, head, we discuss. Signals, trend reversal. This is the most important thing, that this is a pattern for the trend reversal. Okay, so as you can see over here, the price was going up, then it came down, then it gone back up, it came down, but this time instead of breaking the previous high, the market dropped down, and this is where you see the real reversal appear on your chart. Does that make sense? Heads up. Okay, I see there's a question as well. Please explain difference between pennant and flag pattern. Okay, thank you for asking the question. question, and sorry, sometimes when I am on my screen I don't see the question slide where I can see if somebody is asking something. So let me go back. So this is a flag. I'll keep it very short and very simple, because if I explain everything again it might be make you more confused. So this is only for you, my friend Julian, because you asked bull flag. Look at this. Only let's take the example of the bull market. This is a bull flag, this is a pattern, pennant pattern. Okay, now if you look at the bull pattern, this is also, your question is right, that what is the difference? Both look identical, both doing the same thing. But if you see over here, this is a range of consolidation. It's like parallel line. You can also call it's a channel in bull flag especially. Okay, if you draw a channel, if you know how to draw a channel, it's a tool basically you can use on 9x markets web trader. When you draw a tool, you can just drag it from here to there and it captures the high and the bottom of the price consolidation. Looks like a flag and suddenly bounce back. But in this one, you will see the size of the move are not equal. For example, this is a long pullback. This one is slightly shorter than the previous one, and this one is mini. What is this showing? This is showing that the sellers are not very confident enough and the quantity of buyers are quite high. Last time sellers took the price down up to this point. Then next time they tried again, they failed to reach here. Okay, so this time they only managed to reach here and they couldn't push it more, and then it went back up. And third time when the sellers tried to push the price down to this area, they failed to manage even the previous one. This shows you the volatility or the liquidity, that the momentum is on the buying side, because every time you seeing a new price is not respecting the same support, if I call this a support. Whereas in bull flag, every time you see the sellers are coming to the same support and then going back. I hope I answered your question. Is there any more questions anybody wants to ask? And Julian, is the concept clear now? I'll take a pause and I'll wait for you guys while I have a sip of my lovely coffee. The reactions showing me we are on the right track and you guys are now understanding the difference between both the patterns. Understood now. Thank you. Amazing, my friend. Well done. So let's go to the reversal one. So where I was, let me see, there is something else. There's another question asking about, sorry, I go on one slide, about the head and shoulder. Why the name is head and shoulder? Somebody asked me. The guy's name is Vikasuddin. So Vikasuddin is asking why head and shoulders. Why is this name? So this is a very funny question, I will say, because the thing is, this is how you identify this in the market. I'm not the one who gave this name. It's someone from 60 years, 80 years since trading exists. Somebody imagined the chart pattern like a shoulder, then a head, and the right shoulder, and gave them. So I'm sorry if you don't like the name or you find it funny. This is not me who gave this name to the market. It's really funny, but it's easy to familiarize that this is your shoulder, this is your head, and that's the other one. Sweet and simple. Now I'm sure you will not forget this ever in your life. Maybe you will forget your partner's name, but not head and shoulders. Okay. So yeah, moving on. So why head and shoulders? So I was talking about the reverse over here, that this is where you see that the market is continuing in the right direction and suddenly the right shoulder gives you a turn and market reverse. After an uptrend, if price forms the shape and breaks the neckline, we are calling this the neckline. Okay, we also call this support. The trend usually turns down. For an upside down version, the trend turns up. So if you can see neckline broken, that means there's a change in the pattern and now suddenly we are seeing market is in downtrend. Everyone understood? Once again, one thumbs up. So I know I am keeping the concept easy and clear for you guys to understand. Fantastic. Moving on. It's a W and you calling it a double bottom, and this is an M and you're calling it double top. Once again, I am not giving these funny names or good names to the pattern. This is something universal. People are using it, so that's why we are seeing it. Our aim is just to understand the concept. You can call it anything. W for whatever you want, M for monkey, whatever you want to name it is fine, but you just need to understand the concept, the psychology behind this. So double top, which is this one, price hits resistance twice, as you can see. Some people call this resistance as well, or like a double high, double top, anything you can say the same thing, and then it goes to down. So this is a reversal pattern where you see price comes once, then goes back twice, and then drops down. Double bottom, same thing, down, this is support basically, gone up, down, same area it hits back and gone up. Double top and bottoms are simple, two peaks, we call it this, the peaks. Sellers take control, price drops, two valleys, buyer take controls, price rises. So in this case, price rises, in this case, price goes down. Very simple. Any questions on this one? Just if anybody is not understanding what is it. So I can see Salmanuddin asked a question that can you show this on the charts? Of course, definitely. Once we understand the definition questions, we understand the concept. Definitely after this we're going on the charts and then we are seeing some live examples. Okay, shall we move ahead? Once again a thumbs up. Fantastic. I feel like I got a very intelligent audience today. Very less questions. So the magical question, how to spot high probability patterns. Okay, now this is the $1 million question, because enough of this boring chit chat. What you want to know about this, how I can make money, correct? This is the part you guys are waiting for. You must be thinking, come on, hurry up, don't waste my time. So let me tell you, know the trend first. So you should know which side the market is heading to. If it's a downtrend or an uptrend, look for some clean shape. Don't consider every shape as a head and shoulder. Okay, I know you guys love head and shoulder more now, that's why I'm saying the name again and again, but not every pattern is head and shoulder. So clean shapes are the most important thing. Confirm with volume, where the market is going, or an indicator of volume might be very helpful for you guys to use it. Wait for the breakout candle. Always use stop loss. Make sure stop loss is your best friend. Make stop loss your best friend. Half of your problems in the trading world will disappear. But you guys are not doing the friendship with stop loss, and that's why you're seeing the account balance is going like this. Stop loss, very important tool. Wait for the breakout candle. Once again, it's a confirmation, very important before entering in a trade. So only trade clear patterns with confirmation. Volume shows strength. Stop loss protects your capital. Okay, now somebody is asking me a question here about how you can set a stop loss. So my friend, I know you must be a very beginner in trading world, that's why you're asking the question. But when you sign up with your broker, in this case 9x Markets web trader, when you go there and when you're about to open or update your position, there's always two boxes. One says take profit and the other one says stop loss. Once you add the exact price number, for example, if I take gold, if let's just say gold is on 3900 and you put in take profit 339 and 50, that means 3950. When price approaches there, your trade will automatically close. Same thing with the stop loss. If you want, you can put 3880 your stop loss. That means when your position goes $20 down, hits 3880, your position will close. And this is where you just set these numbers and update your position or open your position, and you will see it will set your take profit and stop loss. Okay, moving on. One more question, I believe. So our charts should always have a volume indicator. I'll say less relying on indicators, because if you fill your chart with the indicators, it looks like a complete mess. Volume is a very good thing because it shows you that where people are interested in buying or selling. Basically, it shows you the trader's mindset all around the world or all around the globe who are sitting on their screen. All the traders, where they're looking, which areas they are targeting, that they think like this is a very good spot to enter in a buy or sell. So volume helps you identify those areas. So it's always a good idea to use it just to identify what is the valuable area where you can go into. And someone asking me if this is a high probability pattern, what are low probability patterns? So my friend, low probability patterns are those patterns which you are drawing on your charts and losing your hard work money. You keep giving your money to the market because the ones you are drawing, they are the low probability one. Because I'm sorry, but it's just a joke. I just wanted to explain you the way you are drawing. Maybe it's incorrect, maybe it's a double top but you marking it as a double bottom. So this is a low probability pattern, and this is where you are losing your money which you're working extremely hard and giving it to the market for free. So yes, this is the low probability pattern. I hope I answered your question. Okay, moving on to the next slide. Mistakes to avoid. I think I should have waited another slide to answer your question, my friend. There you go. We have the answer of your question already. Make sure you say thank you to my team who made this, because they already answered your question. Entering too early. So basically, sometimes the setup is not even completed and people entered. The traders are in so much rush that they enter and they see losses. Ignoring volume. This is for you, my friend Julian. Volume, don't ignore. You ask me the question again, don't forget to say thanks to my editing team. They're answering the questions before you ask. Over trading, small move. Once again, a very big no. Forgetting stop loss. Once again, I think we discussed everything. I'm just going one step ahead from the slide. So yeah, these are the things which are are the common mistake a lot of newbies, the new traders in the market, they do. So you need to make sure you don't repeat this. Patience and discipline are key. Don't trade every small move. Wait for the confirmation. So patience and discipline, which I believe none of us have it at all, because nobody is disciplined. That's why people lose money. We need to make sure we stay disciplined, we stay patient. But we say this to our friends, we say this to other traders very nicely, beautifully, but when it comes to follow ourselves, we are one of them as well. We ourselves even don't follow it, and that's the reason we lose money. So guys, work on yourself first. Next, so key takeaways and next steps. Okay, some more information. Pay attention on the slides, not on the beautiful face here. Let's carry on here. Focus on clear patterns. Same thing, continuation or reversal. Clear pattern is a very important thing. Without it, don't enter. Don't. Market will give you 100, 200, 500, even thousands of opportunities on daily basis. So no rush. Confirm with volume or breakout. As I said, volume is one of the best things to use, or the breakout pattern, or breakout where candle is doing a breakout of support or resistance. It will give you a right guidance where the price is heading. Practice spotting patterns daily. It's a very good idea to draw these patterns and see if the market is actually respecting or not. This will help you making sure that you're drawing these patterns correctly. Start small and build confidence. Confidence is the key. Building confidence means building your biceps like this. If you have like big biceps, you look like a big boy, and people will think like, yeah, this is the guy I don't want to mess up with. Same thing in the trading as well. If you have that confidence, you will feel that energy, what you feel in the gym when you're lifting 50 kgs, 60 kgs. Okay. Trade the pattern, not your emotion. Continuation patterns show the trend will likely continue. Reversal pattern shows that it will reverse. Sweet and simple. Let's not waste a lot of time into this. Explained you already. I'm sure you guys all understood what this means. And suddenly I have a question. I love your vibe today. Yeah, actually I'm in a good mood because it's the first day of the month. I just got paid, so my pockets are full. So yeah, this is the reason you are seeing me with such energy. Right. That was just a joke, by the way. Yeah, I'm always energetic. I don't know why you're saying only today. Yeah, I don't like that. Okay, the next one. Thank you. This is my favorite slide. Thank you. Nothing else. Okay. So, any questions before we jump onto the real charts? Anybody wants to ask me anything? Feel free. I'll give 1 more minute in case you guys have any questions. And meanwhile, I can have a sip of my coffee, which is all cold now. No good anymore. So let me stop sharing for a while because now I need to make sure that I go to the platform. So no questions so far. Let me also share my screen. I can see there's a question somebody is asking me. His name is Jalal Sharma. He's asking the time frames matters in the chart pattern or no. So Jalal, my friend, the time frame, the higher the time frame, the easier it is to identify the continuation pattern, reversal pattern, because on a higher time frame, if you spot a pattern like this, that means the accuracy becomes higher. On a daily, for example, just for an example, on daily time frame, if you spot a head and shoulder, the accuracy might be 90%. On a 4-hour time frame, it might be 60%. On a 1 hour, 40, 30 minutes, 20%, 15 minutes, 10%. So from top to bottom, you see the accuracy also keeps going down, because the more data candle hold, the more accuracy, the more data you are dealing with. So higher time frames are always the key. I hope it makes sense. Fantastic. Okay, now without wasting any time, I will show you some example. Let's take gold. I've done a lot of analysis on gold. Let's find something new today. GBP USD. Let's see. This looks clean. So now this is a clean 1 hour time frame. Okay, the time frame on the 9x web trader is 1 hour. First thing what I'm seeing here in this market is where the trend is going, which I can clearly see it's in a downtrend, because the market going from top to bottom. Who else is agreeing with me that this is a downtrend, or somebody believes it's an uptrend? Just give me a thumbs up if you think it's a downtrend. Right. Okay, so if we look at over here, we need to find anything, because I am looking for this is a continuation market, so most likely I'm looking for a continuation pattern. So in this case, without wasting any time, I'll go here, take my magical tool out and draw like this, and then I'll draw like this, and then I'll draw again like this. And if I zoom a little bit now, as you can see, what is this, guys? What is this? 15-20 minutes back we just discussed, I showed you on the slides as well. What is this? So continuation, the trend is in a downtrend, number one. Number two, suddenly there's a sharp move towards downside. Very good. Suddenly the market is consolidating. Okay, and suddenly I got a pattern which is called as bear flag. And then what happened with the confirmation? Look at the move. Boom, market drop. It took me really one and a half minute to find this out on the chart. Now you tell me if you have any particular pair you want me to go and find something like a head and shoulder, double top, double bottom, flag, pattern, anything. If you have it in mind, please write it on the chat and I will do the analysis on that. I think someone put XAU USD. Okay, gold. I actually didn't want it to ruin my analysis on gold, but it looks like it's audience request, so I have to do it. Okay, let me just clean my lines, which I use it for myself. Let me make this a bit clean. Okay, let me just change this as well. Okay, so now this is gold, and now on gold I'm looking myself on, let's say, what time frame do you guys want me to do it? Daily, 4 hour, 1 hour, 15 minutes, anything? Julian, you asked me to go on gold. Tell me, what time frame do we use? Month, week, daily, 4 hour, whatever you're seeing on the screen, I'm open for anything. I just want to make sure that audience understand that it's not something I'm just pre-planned or kept it or I found it, that I'm showing you that whatever you guys say, definitely I can easily find it for you. So 15 minutes. So guys, one of the audience members, Julian, thank you so much for volunteering and helping me out here, and you want 15 minutes, so let's go to 15 minutes. Let me close the moving average. I don't need this. So first of all, what am I seeing? I'm seeing a uptrend, right? So this is an uptrend. That means I need to look for continuation one, because I don't see any reversal happening and the price is nearby here, so there's no point I look far away. What I need to do is I need to find something over here. So now look at this. I'll take my magical tool out once again. That's like this, once again like this, once again like this, or if you want I can take the wick as well and draw it like this. So guys, what are we seeing here? This is a bull flag. Now I did not know this before, that I will find a bull flag, a double bottom, head and shoulder, whatever it is. Julian requested me to show if it actually works. I asked him what pair, what time frame, and suddenly, and this is the live chart by the way. Right now we are over here. This is a live candle. The price of gold is 3,874, and in the live market almost, this is, if I check what time is this is basically today's in the morning. So I'm not showing you something which is 2 weeks old, 1 month old, 2 years old. I'm just showing you what happened this morning, and because we are seeing the latest price, the latest data, that gives you the more accuracy that this works even in the live market as well, because the data is only few hours old. Okay, so look at this, a bull flag, and suddenly a breakout happens, and look at this. If anyone would have bought it over here, which is 3,866, look at the price gone up to 96. So from 66 to 96 is a $30 bullish momentum, $3,000 of potential profit on one standard lot in how many minutes? Because remember, we are on a 15-minute time frame. 15, 30, 45, 1 hour, 1 hour 15, almost you can say 2 hours. 2 hours of time, $3,000. Now tell me, which profession is giving you $3,000 in 2 hours of time? And this is the morning hours, by the way. I'm not talking about midday, evening. This is, most of the people are sleeping by this time in their comfy bed. So you can see that this is the power of the pattern. I would like to show you guys one more example of a reversal, because now we have checked couple of examples with the continuation one, but I really want to see something which is a continuation. So for that, I think gold is a good example. But anyone once again wants to help me here with another pair or another time frame, please write it down. What pair or what stock, commodity, crypto, and I can do it for you guys. I'll give you 1 minute or 30 seconds. 1 minute is too long. I'll see. Okay, someone is asking to go and do it on a FX pair. Okay, your wish, my command. Okay, FX pair, let's go to a good one. GBP USD, Euro USD, yeah, the most fancy one. Euro USD, a lot of people know about this, and we are on a daily time frame because the higher time frames have the higher accuracy, so let's stick to a higher time frame. So okay, I'm seeing if I zoom out the chart a little bit, I'm seeing that the price is slightly going down, and the reversal came from here because now I'm seeing the market is going up. So what do I need made over here, I can clearly see that. Let's do it from here. The market came all the way up to this lowest point, then it gone up. No, I need another one. Then it gone all the way up to here. Okay, then I need another one. This is why I hate trend line. And then it came up to here, and then I need one more. That's it. It gone all the way up to here. So let's do it. So what is this, guys? What is this? I'll zoom in a little bit for you. This looks like to me a double bottom. Now this same area over here, we can also draw a support line and say this is support. And then what we are seeing here is double bottom, from where the market was in a downtrend and suddenly double bottom appears and the market reversed from here and it's gone completely in an uptrend. This is the magic. This is what these magical patterns does. And now you see it's not a small momentum. Whoever got this opportunity or took the opportunity on this level, look at the jump of the price, or look at the profit or risk reward ratio, whatever you want to call that, how much you have picked over here. This is just one example. So this is an example of the pattern which is reversal. We done few examples of what you call the continuation ones, and this is something you need to practice. Once you're gonna start doing the practice, you will feel that this is something which is valuable. This is something you can see it's happening, and when you feel confident enough, you will draw more accurately and the results slowly will come. Okay, so I believe that's pretty much it. We have covered few examples. If you want to find your favorite head and shoulders, feel free, because it takes sometimes a lot of time to find the right setup. Although I can see there is one head and shoulder, I can call this the left shoulder, the head, and then the right shoulder over here, and then suddenly market crash. So another reversal. Not gonna draw it, but you see it's very easy. All you need to do is just pay attention and understand the market. That's it. So this is what pretty much it. If anybody got any questions, feel free. I'm out of breath now, so I also need to pause and just make sure if there is any question. Now is the time. By the time I'm having another sip of my coffee, it's completely cold. Right, someone is asking me a question over here that why not I can draw this on a monthly time frame. My friend, if you have millions of pounds in your pocket, please go ahead, draw it on the monthly time frame and wait for 3 months to just enter in the market. Monthly time frame is very good, but it's for the big players. Okay, that means if you're drawing your if you're doing your analysis on a monthly time frame, that means you need to plan your entry either on a weekly, on a daily time frame, or on the monthly time frame. And now to plan your entry on the monthly time frame, you need to wait ages. I'll just quickly show you the same chart on the monthly time frame. How does it look? It's loading. That's it. You see, it's very difficult on the monthly time frame to understand the market. Plus, if you had entered on a position here, you need to wait how many months? 1 2 3 4 5 months. You need to hold the trade. You need to make sure that you have enough capital that just in case price is about to go in reverse, it doesn't hit your stop loss. That's why I said that you need a big capital in this. But whereas on the other side, if you just go on daily, look how suddenly things become easier. You see a double bottom is forming between 5 to 10 days, and then you entered and you capitalized the opportunity and made some good potential profit with the correct risk management. Now another question I can see here is Farah Khatun. She's asking that how much is the minimum I can deposit. Okay, the minimum, once again, Farah, depends on how much is your trading goal, what exactly you are looking to make from the market. If your goal is 1 million in a month, of course then you need to invest $1 million. If your goal is $500 in a month, then at least a $200 account, $300 account is a month. If your aim is $10,000 in 1 or 2 months, then of course the deposit should be $5,000, $10,000. This is the question for you, not to ask me what is your goal. Based on that, you need the capital. I hope I answered you really well. Got another question. What is the function of the order flow from Miguel? Order flow, let me just click here so it disappears. Order flow is a complete different concept. If I'm not wrong, you are asking about the order blocks, FVG, order flow, that order flow, correct? That is completely different. It comes under the SMC. For using the order flow, you need to make the whole SMC concept. That's something else which we will be covering in the upcoming videos. And order flow is a beautiful concept, but once again very time consuming. It won't be possible to explain in few minutes, but still say the same thing. Order flow is something, it's like an area on the chart where when the price comes up, you just need to time your entry. That's all, in a very short brief. Another one, in your opinion, how many pairs should we be familiar with or trade? So to be honest, even if you just master one pair, 2 pair, a lot of people I know, they only trade in in oil. A lot of people I know, they only trade in stocks, Apple stock, Tesla stock, gold, these type of things. Whatever suits your trading style, trading strategy, I suggest master that. Go ahead. The setups, the chart patterns you are drawing, you see 10 of them, you find it on gold on daily basis. But when you switch to crypto, you're only finding 5 setups like this. So that means more opportunities on gold. So for that, what you can do is you can only master on the gold and then just go and jump on it. Okay, that's all pretty much you need to do. But if you want, the more is the better for you, because more opportunity. If gold is not showing you anything, you jump to the other one, just go over there, and that's it. One final question, guys, one final question, because I'm getting tired now. I'm non-stop speaking and I need to breathe. I'm joking. But yeah, one last question. I think somebody asked me again. I think I answered the question already. I'm seeing this again here. So one last question, guys. Anything? This one question from Alan Donald. Alan is asking that what is the regulation of 9x market? So 9x market is regulated by FSC, and that means your funds are secure. And always, guys, I'll just tell you something very important. When choosing a broker, it's very important to go with the right brokerage. Why and how you will identify that? With the licensing. If the broker is not regulated, it's one of the biggest red flags, so stay away from that. So I hope I answered your question. With that, we're gonna wrap up the session today. I say thank you to all the audience who came and joined us today, and I'll see you in the next webinar where my colleague Azhar, he will be helping you out in the basics of trading. So thank you for attending and have a lovely day. Take care all and see you. Bye.